what these traders are talking about, not only myself, but everybody in here, is just phenomenal. So, thanks, David. Thank you, everybody, for being here today and coming to this event where literally shows us that you need to learn and that you want to learn more about trading and not just dive into trading. So, today's presentation is going to be about swing trading stocks. I have been swing trading stocks for over 35 years. I have been on the investor side and also now I'm on the retail side. So today I will present how you too can swing into wealth with the proper mindset, with the proper tools. So for those of you that are new and do not know me, my name is Anka Metcalf. I am the CEO and founder of TradeOutLoud.com. And I have been a professional trader focused on being profitable and focused on helping traders as well for over 25 years. I am focusing on making my money work for me as an investor. And I also swing trade and day trade. I have been dedicated to improving people's lives through trading and investing within the last 15 years since Trade Out Loud came about. I also come with 10 plus years experience in investment banking, and I have been a very successful trader and investor without a losing year to date. So you could have a losing month, you could have 3 losing trades in a row, but the bottom line, when you draw the line at the end of the year, see what your commissions were and see what your profits are. I have been positive year after year after year. And I have been one of those traders that I have to say, I do not pride for not blowing up my account. So I specialize in high velocity trades. Today, I will share a little bit about what a velocity trade is. The agenda for today is relatively simple, and we will talk about the exact framework I use to spot high probability and probability swing trade setups before they explode, and how to make our money work for us even when we're trading part-time or even when we're sleeping. So, why do so many traders put in the hours, take the trades, and literally still don't build income or lasting wealth? And they still blow up accounts. Like you're constantly at that on that rat wheel. Well, it's not because traders are lazy, because we're very focused people and we're literally watching the news, we are watching charts, we are constantly watching the markets. And it's not because we're bad at charts. In fact, I know a lot of traders that would put to shame even institutional traders. But it's because some traders are focused on making the trades and not building a system. They're focusing on revenge trades. They're focusing on quantity of trades versus the quality of trades. And today I will be talking about the 4 traps that keep traders stuck. The number 1 trap is signal chasing instead of setup mastery. So what does that mean? Jumping from indicator to indicator, from YouTube strategy to Discord or X alert. And when you chase signals, you inherit inconsistency because you're always running for that perfect trade that somebody else found it for you. When you master setups, you create repeatability. So what that means is that when you are coming into the market, you need to be in the zone. It's just you and the charts. I have nothing against following somebody or, just using everything else that is available to us these days, whether it's scanners or friends that are having Discord rooms or X alerts or YouTube videos that are posting YouTube videos, but use them as your personal scanner. And if those specific traits meet your trading plan, then execute the trades. But don't take the trades blindly. Number 2 is timing, no timing framework. So timing is very important. So some buy because it looks good now and sell because it's scary, where it's the other way around. Typically, when you're having fear in the market, the fear is pulling the price into a key area. And oftentimes you're going to see a stock that has reported earnings. Let's say it had bad earnings or it had, you know, bad forecast. But the reality is that if that specific stock is pulling back to a major support zone, then there is the likelihood of the price rotating off of that level. Because don't forget that over 87% of the market volume is algorithmic trading, and they react on support areas, on resistance areas, as well as some other indicators. Professional traders used a timed playbook when the market is likely to move, how far, and what confirms it. So we use separate tools that are very easy to use. They are free indicators that come with every single platform on this planet. For example, if you have a stock or an ETF that is trading into all-time highs, no, the moon is not the indicator. The stock is not going to continue its way to the moon. But we do have a way of finding out a measured move, whether it is by symmetry or and by Fibonacci extensions. So there are ways for institutions to forecast the next measure move into the market. And the same thing applies to pullbacks. And we're going to take a look at some charts today and see, are they ready for a pullback? So without timing, the right idea at the wrong moment becomes the wrong trade. So I have here a quick example. Does somebody here remember the BYND trade that happened towards the end of October? And that is Beyond Meat that popped almost to $9 and then it broke down. Is somebody in here curious to see where the stock is at? Just curious. BYND. We could take a very quick look at the chart and see where it's at. And it's back to $1.40. So this is the type of hype that you can get from the media. This is the type of hype that you can get from X, from any social media post. And then this is what happens. And you're wondering why, once again, you blow up an account by literally following something blindly. So this is not fun. So this was one of the ideas, and it says here, Beyond Meat shares soar at retail trader spark meme coin euphoria. Again, I'm not saying that you should live in a bubble and live outside of social media, but be very leery about what you hear and also do your homework, okay? Because right now it's back to $1, so it's back here. So after a pop-up of almost like gazillion percent, it came back in. So you don't want to be on the wrong side of the trade. Okay, so the next thing is profit taking without a plan. Oftentimes traders pull their money out of the market prematurely. Taking profits is not a plan, but it's a moment. And income and wealth building requires a very structured scaling, target, and trailing process. And this latter strategy is what literally progressed and doubled, tripled each year my trading accounts. And in fact, talking about, doubling accounts, I'm going to host for my members a small lecture this week on how you can comfortably double your account each year. And that is at a minimum. So giving the blueprint of doubling the account. And basically the trailing process at what keeps you literally afloat. So sometimes it is better to have a structured trailing process than even scaling into targets. And the reason for that is very simple. So I'm giving you an example. What if you are in a stock like Apple? Okay, so imagine a stock like Apple. And imagine the stock is trading like, I don't know, let's say $150. Okay, so this stock that is trading at $150 You have a profit target, let's say at 200, a first profit target. So your first target is 200. Let's say the second target is at 215. Let's say the next target is at 250 and then 300. So a lot of times I see traders that, and it's not I don't think it's a bad idea, but I think you're taking yourself out of the trade prematurely. So if you want, you could take notes here because what I'm about to say is going to blow your mind because I'm going to teach you the exact structure of price action. So for example, when the price action of the particular stock starts moving in your favor and it's getting very close to your target one, I'm not really ready to get my mouse and click to collect half of the shares, to collect half of the position, half the profits, or to collect a quarter or whatever the size is. So that means scaling out. However, I look at the structure of the chart, and if the price action is robust, if the volume is constant, and if I see that the price action is getting into that 200 and it's actually moving above that 200, let's say price target level, what I do is I take half the size or a quarter of the size, depending on my risk tolerance. And what I do is I place a trail stop, which is so much different than taking profits at that 200 level. So now, if the price should continue to travel, let's say into target two, all I have to do is raise my trail stop so I don't take myself out of the trade. Because oftentimes when you're getting market dynamic, especially in earnings season, that is literally ruled by fundamental trading, and therefore you can experience a lot of follow through. These 6 weeks from the beginning of earnings seasons are the hottest weeks. You're going to see that this method is 90% more profitable than scaling out at each target. So I hope this is going to help you, whether you're day trading or swing trading or even investing. This is something that I apply on a day-to-day basis. So basically, what you're doing at this moment in time when you're trailing is you're letting the market decide for you. So you are relying on the market information on how you trail the trade. So it's not going to be your decision. You don't have to sweat and worry. It's going to be the market decision. And same thing if you have a stop. For example, you get in, let's say, ABC in a stock, ABC at $150, and you have a stop at $100, let's say, hypothetically. And when you have that hard stop, then when the price is going to hit that hard stop, you're going to be exiting the trade. So again, once again, it's the market that is taking that decision for you because it proves that that decision that you took then and the market environment that you took that decision based on is no longer working and it's rotating on the other side. So you do not want to lose more than your allocated risk per trade. The other topic that is very sensitive is risk sized by feelings and not by math. You see, you don't have to be a math whiz to be a trader, but you do need just second grade math. So risking what feels okay is how accounts bleed slowly and how you blow up an account. Risking by R units versus dollars is a fixed percentage per trade that will let you survive down drawdowns and also compound winners. I'm going to give you a quick example from two trades that I took yesterday. And these examples are day trades. So I took the first trade, and the first trade, it was a futures trade. And in futures, if you don't position size, literally you have to give it up. Like seriously, if you allocate a certain number of contracts, depending on your account size, you're done. You're toast. You're never going to progress, let alone double your account. Like you're lucky if you're going to survive a year. But when I took the first trade, it was a trade in NASDAQ. And that specific trade lost, I don't even know how many points. Okay, let's say it lost 60 points. I'm just saying 60 points. Then I had another trading opportunity in the Dow, and then that specific trade started working for us. Okay, now at the end of the day, when you draw a line, if you traded with a standard contract, you would still be underwater because the NASDAQ trade was a lot bigger in losses than the gains that were accumulated by points in the Dow trade. So what this means is that if you would have traded with a standard contract, you would be in the red. However, if you risk with the R unit, where you allocate a certain percentage of your account size per trade, and when I day trade, I allocate 1% because day trading is a little bit more aggressive. You could take between 1 and 5 trades every single day, depending on the market environment. For example, today I only took 1 trade. I made 2 Rs. I was good. Yesterday, if we would have used the R unit, which we did, that first NASDAQ trade was -1 R, and the second trade produced 3 Rs. So then the second trade was able to recuperate the loss on the first trade, right? The 1 R, and we were 2 Rs in profit. So bottom line, for the month of November, I'm already up 4 Rs. Now, do you guys know, quick question, do you guys know how many Rs do you need per week in order to double your account? Whether it is swing trading or whether it is day trading. How many Rs do you need in order to double your account? Does anybody know the answer? 3 Rs? Okay. You need actually 2 Rs per week in order to double your account every single month. Every month. And we're doing way beyond that. Way beyond that. So with discipline, you can achieve not only doubling or tripling your account, but generating wealth. So in swing trading, because swing trading is a little bit more is not as aggressive as day trading, and you may not take 6 trades in a day or 5 trades or 2 trades in a day. It's a little bit more selective because trades do not set up every second. Guess what? I risk more. So my risk per trade when I'm swing trading is 4%. Okay. Now, how many times have you ever had a green week turn into a flat month because there wasn't a plan to keep the gains? There wasn't a plan to keep the gains. So at this point in time, because let's say in that account, that let's say day trading account, I'm already up 4 Rs. Okay, I could just quit for the rest of the month. Correct? I can if I want to. I can if I want to. But from this moment on, guess what my plan is? Because I'm up 4 Rs already, every single day, I'm going to change slightly my plan. So tomorrow, when I'm getting into the market, I'm going to allocate that 1 R. Again, because this is what I do. I allocate the 1 R. So if the trade is a success, I'm going to keep on going, right? Even if it's a break-even trade, or if I make 1 R or 2 Rs or 3 Rs, I'm going to keep on going. But I'm never raising my Rs. I'm never saying that, oh, today I risk, let's say $1,000. Tomorrow I'm going to risk $2,000. You have to keep it the same. So the fix is not trading more. The fix is trading with an income wealth framework, repeatable setups, precise timing, and compounding process, and risk rules that protect your capital so it can grow your account. Because this is the bottom line. Everybody wants their account to grow. And tonight, I'm going to show you how to be able to swing trade and identify that sweet spot that can deliver those promises that are spotted on charts. They're not hyped areas, but the chart needs to show you how far it can go because hypothetically on paper, that's fine. So on paper, I could say, okay, I'm going to take this trade and I want 3 R's out of that trade. It doesn't work like that. The chart needs to show you that it has room to run for actually more than 3 R's so it can run 3 R's. So welcome to the future of wealth creation and get ready to unlock the fastest and smartest way to grow your money. And today I'm going to share with you the hidden secrets of the top 1%. Swing trading is the key to multiplying your money with precision. And why do you think that swing trading is so fantastic? Why do you think swing trading is so fantastic? Because you're detaching yourself from the computer. Okay? You're detaching yourself from the computer. Okay? So avoid the pitfalls. And there are 5 mistakes that are costing traders thousands of dollars every single day. Mistake number 1, chasing the wrong stocks. I'm a stock fanatic. I've been trading stocks for 35 years. 35 years. I have been on the investor side. And for the last 25 years, I have been on the retail side. I gave him my job and I'm like, I quit. This is what I'm going to do from now. And I dove into day trading. And I started with day trading stocks that increased my wealth. So I created an ecosystem because when you're day trading, you're generating income, you're paying your bills, and whatever is left, you allocate to your investing account and you allocate to your swing trading account, whether stocks or futures. I have added futures day trading about 11 years ago. 11 years ago. Okay. And that was from the advice from, I still have a financial advisor. And yes, I don't take his advice on what stocks to trade, obviously, but how I distribute my money into different buckets so I pay less taxes. So he advised me to switch from day trading stocks to day trading futures because I would keep more profits. And I did that. I didn't like it at first, but I did it. And I don't regret it because it's 90% less work. Okay. It's literally 90% less work and so much more profitable, less taxes. But that's another topic. Okay. So we're going to talk about that 2020 Davidson. We're going to talk about that on how to identify good stocks. Stick around because this is what it's all about. How to identify those stocks and the setups. And we're going to move to charts in just a second. This is going to give you a practical look into what you need to see. Because remember, all the traders have this photographic memory, right? And our brains are able to identify a good trade from a losing trade. You know how? Because if you look at a chart right now and you have to squint, you're like, oh, I don't know. I'm not really sure. There's nothing there. But if you look at a chart and you identify a buy setup, a sell setup, a breakout, a breakdown, a trend, a superpower trend, then you're going to have a good pick. You have to have a selection criteria in order to do that. And you have to have a minimum of technical analysis skills in order to achieve that recognition of patterns. So mistake number 1, chasing the wrong stocks. Trade the right stocks, not the hyped ones. Remember I showed you Beyond Meat? Yeah, no. Mistake number 2, over trading or burning out. More trades doesn't necessarily mean more profits. Why? Because when you take a trade, 2 trades, 5 trades, 10 trades, you're actually putting up more risk, more R's. So learn the power of patience. And trust me, if you know how to trade, you would have so much patience because it's about the pattern. You have to let the chart do the talking. Don't just jump into the trade. Don't FOMO the trade. Mistake number three, trading without a plan. I was in one of those traders when I started day trading. That was 25 years ago because I came from the institutional side of investing and we had a plan for investing, but it was nothing like a day trading plan. So I thought, yeah, I could apply that and I have that and I have that in my mind. Wrong. The moment that I started to put some ideas for my trading plan on a piece of paper and have it in front of my desk every single day and read that every single day like a Bible before my day trading started, my swing trading started, my investing day started, I was in control because I knew exactly my risk. I knew the hours that I perform well. I knew everything that I need to look for because when you have a plan, you need to look at a specific element in the market, and you could trade small as, for example, have a small plan that would say I'm going to look for stocks that are pulling back to the 21 simple moving average on the daily, and I'm going to watch for a price action rotation around that point. That's a plan. That's a plan. And start from there, tweak from there. Also take into consideration the market environment. Mistake number four, letting emotions control your trades. Fear and greed destroy accounts. And you're getting the fear when you're only fearful when you risk more than you should have, when you risk more than 1R. I have to say that I was one of those lucky traders and investors that came from the investing world and knew this lesson very well about the R and the risk, especially when I dove into my day trading endeavor. And I knew that I should have an allocated risk per trade because I knew that. Never had fear. I had some emotions when I was placing my first day trades because it was in and out, in and out, in and out, in and out, versus investing where I came from, where we would just call the broker and say, hey, buy, I don't know, let's say 125,000 shares of this. It was so different. Okay. So the way to stay disciplined is have a solid money management plan. So if you're just starting out and if you're hearing this, you may get a little bit impatient, like show me a chart, show me a setup. I want to make some money now. It's wrong. You need to learn first how to manage your money and how to manage your R and start very small. And mistake number five is not investing in the right education. So all the traders fail that go blindly, literally. And I don't want you guys to be one of them. And because you're here, you're not one of them. Okay. So you don't have to be a math whiz in order to be a very successful trader, swing trader, or investor. You don't need a finance degree. In fact, a lot of the traders in here are probably way smarter and know more technical skills than probably somebody on Wall Street. So we're going to get right to facts right now and right into charts. Did you guys know that every year stocks will move about 20 to 30%, maybe more each year? And this happens at least a couple of times a year. What? How awesome is that? We're talking about really high percentages, 20 to 30%. Now, this is a chart of the SPYs, and this is a weekly chart of the SPYs, and it shows the swing lows to the swing highs, so you can identify the whole swing. I'm not saying that you're going to nail the bottom, you're going to nail the top. It just shows you the potential swing, and what you're going to be making is the core of this. Okay, the core of this. And remember that I was telling you just moments ago, a few seconds ago, that you need to have a trading plan as simple as watching the price action pull back to a 21 simple moving average. This blue line right here represents the 21 simple moving average. It's the most used simple moving average in history. So once you see a pull back to the 20 simple moving average, you're waiting for a pattern, but you need to know patterns. You need to know patterns. For example, here, this is an inside pattern that is forming within the prior week's high-low off the 20 SMA. The buy in this case is the following week that breaks above the high and the stop goes the lowest point of the pivot. Simple. It sounds simple, but you need to know it. And you need to know what to look for. And this is a swing right here. That is very impressive, right? Very impressive. This is, I would say, about 12% swing. And again, the entry would be here and your exit would be at the sell setup that forms, right? Because it's not maintaining the structure and the price action is turning around. The red bar, the bear bar is trading below the prior bar's low, forming a sell setup that is pulling back the price into the 21 SMA. And you can see here flurrying down, pushing back up, right? So at this point this week, this bar was extremely red. And by the end of the week, the price action zipped back up to the 21 SMA. Now, the buy pattern here is above this prior high. So that therefore, the next week, this is the buy over this high. The stop goes below the low. The first target is into resistance. And the second target is formed by extensions. It doesn't go to the moon. You have to have the measure moves because institutions use measure moves. So you have to know exactly where those measure moves are so you know where institutions are looking to scale out some of their profits. And here we had the Liberation Day pullback, right? So this happened in April. But from April lows until pretty much around around the time that we're trading right now, this was almost a 39% move. And this right here, an 18% move. So you can see here that throughout this year, we had pretty generous moves. Now this is Apple, and this is 2025 from swing low to swing high. We have 13%. From this swing low to this swing high right here, we have 56% measured move. Imagine if you know how to identify some patterns here and take advantage of this. I'm not saying that you're going to make 56%, but in swing trades, you can make 3, 4, 5, 10% or more. Remember that institutions usually generate 8% hedge funds per year. And look at these moves right here. This is 34% in GLD. So what is swing trading? Let's talk about identifying those patterns. It's all about catching the sweet spot moves in a stock. Those prices swing, those price swings that play out over days, not minutes, instead of scalping tiny intraday moves or sitting in a stock for years like Warren Buffett for generational wealth. Swing traders ride the powerful short-term waves in the market. But how long do you hold? That's a big question. Well, I could give you a short answer. As long as the price is holding the stop and as long as targets are achieved. And as long as you have a trailing process in play. So that resumes to typically a few days to a few weeks. Think about 2 to 10 days on average. However, if the market is sideways, you're going to note that these trades will remain sideways as well, depending on how strong or how weak they are, right? But if they're strong, they're going to be basing into the highs. And when the market is going to start moving higher again, they are going to outperform the market if they have relative strength. Okay, so let me show you some more examples. Here's the Qs from swing low to swing high, 28% here. From swing low to swing high, 21%. From swing low to swing high, 25%. Swing low to swing high, about 44%. Let's take a look at Microsoft from swing low in April. To the swing high that was sometime in July, 61%. Oh, and by the way, oops. Okay. Here, I have a big question mark. What do you think Microsoft is going to do now? Do you guys want to take a live look at Microsoft right now? Yay or nay? Okay, thanks, Linda. All right. So here is Microsoft right now. This is the peaky high, right? Where we saw that the price action went 61% up, right? 61%. You guys see it right here. Still basing. It had earnings, right? It had earnings last week and it's still basing. So what do you guys think is going to happen? Let's go to the weekly chart. As long as the price action is going to hold support, you can see support from this prior pivot low. And as long as the price action is going to stay within this resistance, it's just developing major resistance and major support. But you can see that the price action is on the 21 simple moving average, right? So what that means is that if we close this week, and again, throughout this week, if we break above this high, we're definitely going to go higher. As long as we're going to actually hold this low. Let's see if I could do okay, hold this low right here. Here we go. Hold this low. Okay. But this is a weekly chart. And again, remember it's on that darn 21 simple moving average again. So we're waiting for the price action to actually start compressing because earning season is creating these really wide ranges. So we're waiting for a price compression. So this week, Microsoft is not going to be in play in my book, but what I'm going to do is I'm going to wait uh, for the week to close. And after the week closes, it's still very early in the week. So I'm still waiting for 553. If it blasts higher, then yes, I'm going to take it higher. But I'm waiting for the compression here. And let's say if on Friday, the price action is going to stay within the same range, then my buy is going to be here. And my stop is going to be right here on the 21 SMA. So I'm going from a really wide range to a really tighter range on the weekly. So I hope that makes sense. Okay, so that was a little mini um, mini example there. Google as well. And by the way, Google, right? Let's take a quick look at Google here live. All right, here's Google. This is the weekly chart. You can see it had earnings inside week. So far, it's still only 2 days, but it's pulling back to the 10 EMA. The 10 EMA is the superpower trend, right? 10 EMA superpower trend. And you can see here that very, very shallowly it pulled back to this 10 exponential moving average. And it's still very, very strong. Okay, still very strong. This is going to be a main watch on the weekly because this could potentially be an inside week because of the volatility that we had last week from earnings. So this is going to be buy above the high, stop below the low next Monday. Easy peasy. Nothing sophisticated, right? Now, let's talk about FNMA. This is one of my biggest gainers in my long-term portfolio. And believe it or not, I initiated the trade in December of last year. I hosted a presentation in January, 3rd of January 3rd, I believe it was, with the market forecast. I always do that for my traders. And we did the market forecast on January 3rd. So I talked about FNMA and I said I'm going to be adding to my FNMA. Okay? Fannie Mae. Fannie Mae. And by the way, did you guys know that Fannie Mae and Freddie Mac's IPO is currently being considered by the US government, but the timing is not yet finalized. There's a lot of pressure, and the reports are suggesting that it could happen as soon as late 2025, so this year, or latest in the second quarter of 2026, or definitely throughout 2026. And the date is a little bit more flexible because there is still a lot to decide in this case. But tentative line would be like November 2025. We could see an IPO. So that would be very interesting. But in this case, from when we hosted the first free presentation that we had about swing trading, TradeOutLoud's presentation for our members and our leads, was first here, and it had a measured move of 276%. Then it had a base and it ran for another 146%. And by the way, in January, this is where I added right here. And then I added more into the $5 area. And then I added more here. Okay, so I added. You guys don't want to know how much I'm up. It's like over 400% up in a portfolio. So imagine allocating your risk in this trade and holding it for 400+%. That's awesome. So when to buy swings? Okay, there's this questions like, I can't identify them. I can't do this. I don't know when to buy. So buy swings when the risk to reward ratio is stacked in your favor, meaning your stop loss is tight near support and your upside is at least 2 to 3 R's above your entry. The timing of the trade. There's a strategy that I like, and this is all about the end of the day. And I love to scan at the end of the day because many swing traders enter near the close once the daily candle confirms the setup. And this is a hedge fund strategy that I'm talking to you guys about. So this is something that when you look in the market and you see continuation into a swing trade, it's generated by these hedge funds that are doing exactly this. And the trigger times often the best follow through comes after the first 30 to 90 minutes in the trading day. That is the professional hour of trading, and that's the power hour. All right, let's talk more. So this is Qs, right? If you see a red bar like this, what do you guys, bullish or bearish? Bullish or bearish onto the next day? Bullish or bearish onto the next day? Type of 1 for bullish and bearish, number 2. And I'm going to show you the chart right here, the chart of the Qs. Here we go. All right. And we're going to go on the daily. Okay, we're going to go on the daily. All right. So remember this chart was showing like this big volatility strike. This was from 1010, right? And we saw a bunch of noise over here. But needless to say that this was it. Okay, so you can see we can bracket this, right? And this was the bar that I'm referring to. Okay, so the price action here, and everybody was like, oh my gosh, what's going on? What's going on? Nothing. We're just holding above the 50 SMA in this case. This is the daily chart holding above the 50 SMA. And this is a volatility strike. And then we had a whole bunch of days testing within the prior range, high and low. So this was the line of the sand. We have the resistance established here and the support here. So once it broke above the resistance, it started to go. But look what happened. Something really terrific happened here. It formed like a really nice, let me see if I can narrow it here. It formed a really nice breakout pattern without, okay, never mind. Okay, so without you having to risk all the way to the bottom here. Okay, so you don't have to risk all that stuff, all that risk. But your entry is here. I'm sorry, your stop is here. Your entry is going to be over the base. Why? Because it breaks the volatility high. So your entry is here. So this is the candle that gets you in the trade. Simple, easy methodology. Stop, entry, and your target. How do you establish targets? You're like, oh my gosh, where is it going to go? It's going to enter the high of the day. Okay. Okay. Here it is. These are your targets. They're established by fib extensions. And you can see here that the price action kept up, moved higher, went to this 1618 level, and then started to pull back. And it pulled back. This pullback that is today is right the line in the sand. So what do you guys think the Qs are going to do tomorrow? Like easy peasy, like no brainer. No brainer. And no thinking, by the way. This is a doji. It's above the 10 EMA, so that is super duper uptrend. Based on the candle, like setup based on a candle. It's going to be bullish above today's high. So going into tomorrow, today, no action. But tomorrow, it's going to be the reaction. If the price action tomorrow is going to get above 631 and 61 cents, it's going to continue higher. First test the all-time high, then continue the extensions that I've just showed you, right? On the same pattern. And guess what? We have the 620. We have the 620 level right here, which is support. We break this. Where do you guys think we're going to go? Not rocket science. You don't have to be a math whiz. Do you guys like paint by numbers? Okay, or drawing by pivots? You see this prior high? Bingo! In sync with the rising 20 SMA, 21 SMA. This is going to be your target. This is going to be your first target. And this is where you have to be very careful. Play some alerts, see how it trades, yada, yada, yada. If you want to take partial profits, be my guest. I don't. So if I get the price in here into the 21 SMA, I'm going to have alerts and see how the price is reacting to this level, because chances are that if it's going to break this level, I'm going to put a trail stop here. I'm not going to take myself out because I love money. And then I'm going to look for a next target, which is going to be in the secondary minor support zone that is deriving from this prior high. And again, same thing here. Am I going to take partial profits? No. what I'm going to do is I'm going to look and see if the price action is going to react according to what the day is like. Like if it's a bearish day, I'm going to let it go lower and I'm going to lower my trail stop. And this is how I trail my whole entire position without taking partial profits. There's nothing wrong with taking partial profits if you don't have a plan and if you don't know much about trading. Okay. All right. All right. So look at this close. What do you think it can happen here with this massive close? Obviously, continuation higher, right? Continuation higher based on this close. Now, who is swing trading for? I mean, I think swing trading is for all of us. Everybody that loves money, wants to have a retirement plan, wants to love everything about the market, and loves the market. We deserve it, right? So it's for busy professionals who want to manage their own money or long-term money. It's for part-time traders who do not want to sit in front of the computer all day. Hands, I mean, I'm raising my hand right now. Like, I don't want to be stuck on it. Today, I run a day trading room as well as a swing trading program. So today, my work day was 30 minutes and I'm done. I was here able to present this for you because it is my obligation to share this with you. Because if it works for me, if I can make somebody love trading as much as I do and learn about trading and dedicate to trading, then you're going to make money too. Retirees, you want to supplement your income, your pension? This is it. Individuals of all ages who want a better tomorrow. I mean, I see so many stories, and in fact, there are so many people that are in their 60s, 70s, even 80s. You can, and they have really nice retirement accounts, and they don't know what to do with them. But it's like, I want extra money. I'm just pulling some money out to live. No, swing trading. Swing trading is the answer. Investors looking for faster returns because I don't know about you guys, but I love instant gratification. And don't get me wrong, I do have investing accounts. However, I love my swing trading because I love cash now. If I want to go buy something, I can do that. Okay. Entrepreneurs and business owners. So, when not to buy swings, never into the tops, never chase the tops, never do that. In the middle of no man's land, when the price action is range bound. So, for example, I showed you the Qs. Like, remember when it was trading within this range and it was trading, let's take this range right here, right? When it was trading between this range and this range, like here, this is no man's land. Okay, no man's land. Ahead of major news, a lot of traders put their bets saying like, oh my gosh, FOMC, if we're going to get a rate cut, the market is going to fly. If Apple is going to beat earnings, it's going to do this and that. And Apple has a record of underestimating and over delivering. No, don't do that. Wait until the data settles, wait until the pattern is formed, wait for earnings announcement, and then evaluate. Or in a dying trend. If you see that the trend is violating, the 21 SMA, if it's doing lower highs and lower lows, that's a dying trend. And this is very important, a low volume. Illiquid stocks. I find a lot of traders that are finding stocks like, I don't even know how they find these stocks. Water cooler discussions, don't know. But they're trading 57,000 shares on a day. Like, what the heck is that? First of all, the spread is going to be wild. The slippage is going to be wild. Don't trade it. I, for example, have a category. And what I'm about to say right now, you could write it down. Because if you want to be successful in the market, look for stocks that are very liquid. I never trade a stock that is trading less than 1.5 million shares a day. I'm not trading some ABCDE stock. I'm either trading Google or Apple or Intel or what have you, or Wells Fargo or Goldman Sachs or whatever. High liquid stocks. Bottom line, swing trading is all about precision and patience. And again, patience comes from trader education. Because if you know how to identify a pattern, you have to have the patience until that pattern is formed. Because if that pattern is not formed, that trade is not going to work. So you're going to buy ideally around support or resistance if you want to short. If you want to short breakouts or breakdowns, whatever the trend is, but never buy into FOMO, spikes, chop zones, or downtrends. And here are my rules. So number one, I'm going to go very quickly through this. Trade with the trend, buy near or at support, risk your R and make sure that the R is the same until you grow your account by at least 50%, and then you can raise your R. Confirm with volume. Again, you have to have that good volume. Avoid new entries right before earnings or major news. And here are some risk management rules. Risk that fixed percentage per trade. 1%, 2%. Again, the more advanced you are, the more risk you can apply depending on your track record. I have a track record of 35 years. I have made my track record public for the last, I think, 15 years. So you're going to have 15 years of data. Okay? 15 years of data. And yes, you could grow a small account. You grow a small account, but you use the same. So imagine this. If you risk 1% on your trade, whether you're day trading or swing trading, you're risking 1%. You will need 100 trades to blow up your account. 100 trades. It is impossible, even for a person that has a small account and literally no trading education, to have 100% losing trades. 100 losing trades. It is impossible. But if you apply, for example, 10% risk on a trade, well, in 10 trades, you're done. Okay? And a lot of people wonder, wow, I just blew up my account. It's because of a simple rule. Position sizing is key. Position sizing is key. So get yourself a position size calculator. We'll offer that for our members, whether day trading or swing trading. And always have a stop. Always have a stop. And also trail based on your risk tolerance, trail based on your trading plan, and never risk more than 5% of your account across open trades. So you're going to have like 5 open trades, right? 5 open trades. And also be diversified, right? So don't buy AMD, Micron, Nvidia, Broadcom. Okay? Just be diversified. All right, trade management. You guys know we already talked about 2 to 5 days on average, depending on the market environment. Scale out at logical targets. I told you what I do with the scale. I look, if I see an entry and if the entry fits my trading plan and my parameters, there's no scaling into entries. Not unless there's, I don't know, like I want to add, for example, because I want to hold that position for an active investment. Okay. Which is not going to be like a generational wealth investment, but it's going to be an active investment. Let's say I'm going to hold it for 5 months or 6 months rather than for 20 years. Don't overtrade, quality over quantity. And again, stay very patient. And you're going to be patient if you know exactly what patterns you are going to trade. So I have a special invitation for you guys. I also have a couple of testimonials here from my members. And this is the P&L from one of my members. He traded PLTR. And this is something that we love to trade. And by the way, yesterday it reported earnings. It went down, and we have a big story today on it. Maybe I don't know if we have time to share it. But Robert is saying you're the real deal. He's a member of my stock swing trader. He has been for some time now. Thank you for the hard work you do to find high odds trades. 100 shares of PLTR have paid for my yearly membership, and I'm in for life. Okay. Here's another member with his beautiful family taking his family on a vacation to Turks and Caicos. And if it wasn't for us, for the course where he learned how to trade, and it was in record time, literally in record time. So we have the stock swing trader program, and you get to join today. The value is it's one of our oldest programs. It has been running for 15 years. It has been featured on Benzinga. It has been featured everywhere. So you're going to get with this program comprehensive market analysis, macro to micro. You're going to get new market focus and themes for each week. You're going to get sector performance, market performance, technical market overview of trades in a video format. You're going to get earnings calendar. You're going to get the economic calendar. You're going to get a live performance portfolio, which is phenomenal because you're going to get access to the trades that I take and the management that I do on the trades real time. You're also going to get my sneak peek into my investing picks, which is going to launch next year. And with the investing course, maybe I should have started with this because I come from the institutional world. But I did it the other way around. So just that FNMA, OMG, like up over 475% in my portfolio. You get access to a private X feed that I'm going to show you in a few seconds. We have 4 minutes to go. You're going to get platform layout, student personal support, risk sheet, risk calculator. Okay, here we go. And money management cheat sheet or what to do when you get into target. So the stock swing trader today is only $97. If you go to our website, it's $299 per month. You're going to get to try it for $97. If you don't like it, okay, then if you don't like it, I mean, if you don't know how to trade, if you don't take the trades, and if you don't, I mean, I don't know. If you don't make money with the trades, like I don't know, I'm gonna give you your money back. Okay. Then it's $299 after the $97 trial, and this is only for today. By the way, it's only for today. So if you want, you could go to our page, which is right here. So I am just going to post it in the room for you guys. Okay. Thanks so much, David. Thank you, thank you, thank you. And here you're going to find a whole lot of information about the program, of how to trade, how they're sent, and et cetera, et cetera, et cetera. And you're going to also have access to the performance portfolio. This is a live portfolio. And if you go to our website and scroll all the way down, you're going to have access to the portfolio 15 years ago. And you can track all the trades that we have done throughout 15 years if you're curious about that. Because I know some traders want to look at that. And there are very few traders that offer that, by the way, because with other trades, there's a lot of talk and very, very few results. But anyways, so if you're interested in that, just thanks so much, David. I appreciate it. And again, here, this is our private X feed. And today, the big news of the day was that Michael Burry, the guy from The Big Short, spent $1.1 billion on NVIDIA and PLTR puts. They're betting. He's betting again. He has been wrong a lot of times. But anyways, we are in PLTR. And I sent the reaction from earnings to my traders reacting off the 200 SMA. So again, a lot of technicals and you could see here, these are follow-ups from our newsletter. So it's not just a newsletter that is sent out, but you're going to see that there are a lot of updates that are being sent out to traders and a lot of charts, so we can learn a lot from this. So thanks so much, David, for having me here today, and I will see you guys